Happy New Year everyone, and welcome to our December 2022 market update. This slide shows the growth of $1 invested in various asset classes for the 3 months ended 31 December 2022. While something of a mixed bag, more positive than negative this quarter, albeit only just. Green shoots in October and November, but pessimism in December around inflationary pressures and the risk of recession depressed returns overall. Jostling for top position this quarter are New Zealand shares in purple and Australian shares in Australian gold, which both would have grown to $1.03. In third place is a 50-50 mix of cash and fixed interest and shares in property, which would have grown to almost $1.02. This slide shows the growth of those same asset classes now over the 12 months ended 31 December. The leader over 1 year is cash in green, where $1 invested 12 months ago would now be $1.02. That's the impact of rising interest rates on cash returns. In second place, in orange, is global infrastructure, where $1 invested 12 months ago would also be $1.02. Middle of the pack is that 50-50 mix of cash and fixed interest and shares in property, which would have fallen from $1 to 91 cents. 2022 was not a good year for investors. 1 year is nowhere near long enough. I always say we need at least 3 years data. This slide shows the growth of these same asset classes now over 3 years. The leader over 3 years is unhedged international shares in Navy, where $1 invested 3 years ago would have grown to $1.23. In second place is Australian shares in Australian gold, where $1 invested 3 years ago would have grown to $1.21. Middle of a somewhat lacklustre pack is that 50-50 mix of cash and fixed interest and shares in property, where $1 invested 3 years ago would have grown to $1.03. Interestingly, that's still slightly ahead of cash over that 3-year time period. Having experienced a negative year in 2022, I wanted to help provide some perspective on what that might mean for 2023. I borrowed a title from one of my favourite authors last year when talking about bear markets, Setting Free the Bears, the first novel by John Irving. This time, I'm leaning into American great Ernest Hemingway and his first novel, The Sun Also Rises. While I won't be taking to any cafes in Paris or bullfights in Pamplona, just like Hemingway's lost generation coming out of World War I, disciplined investors are resilient and strong and will be rewarded over time. To illustrate that the sun does also rise, I examined calendar year returns from the S&P 500 index in the US from 1946 to the just ended 2022. Of those 77 years, 17 delivered negative returns. Only 3 times in 1973, 2000 and 2001 was a negative return followed by another negative return. The average return over the full 77 years was a very healthy 12.2%. The average return after a negative year, and that includes those 3 consecutive negative years, was an even healthier 17.7%. Never a guarantee or a prediction, but both of those average returns feel like the sun rising to me. Having the resilience and strength to remain disciplined over time will be rewarded. And remember, the sun does also rise. Thank you all for watching. I look forward to updating you throughout 2023.